Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
All right, welcome back. So what, 80 points now gone on the Nifty. So there is additional pressure which is coming through. Almost going back to the day's low. Not quite, but almost there. 1160 is where we're at. Ashwani Gujral is now back with us. Ashwani, thanks very much. I mean, the market is clearly weak. One can make that out. But what do you do and how do you position yourself?
See, we have twin problems. Whatever, NBFC, etc., that time will tell. But the other problem is the macros. If there was only one problem, because of Friday's fall, etc., we tried to buy a retest of the lows. But now crude is getting beyond 80. And, rupee is at lows of the day. In a weak market to deal with such issues is going to be difficult. So right now we have exited our intraday long positions and are now positioned short, because if crude is going to make fresh highs, then it's not going to end so soon. So my sense is second half could be similar to Friday's second half. This is a good time to get short on individual stocks as well as Nifty and Bank Nifty, because with these twin issues, I think a lot of money will still come out of financials. Having said that, HUL is a buy with a stop of 1600, target of 1720. I think PSU banks are now starting fresh downtrend. So Canara Bank is a sell with a stop of 238, target of 224. And Kotak is a sell with a stop of 1170, target of 1100.
What are you making of this fall? This fresh fall that we are seeing within the mid caps, Ashwani?
Last year it was a cost of capital rally. This year it's a cost of capital decline. So all that underperformance and low rates, etc., that paradigm is over. It's not DHFL. That is a symptom. Basically, I think people will get underweight on financials by the time this is over. So, trying to buy because something has corrected 10% and 5% is not the way to go. This is large scale exodus on financials that we are looking at, and with good reason. Bad macros, trouble in the financial space overall. So this basically are triggers to get people underweight, and that should allow rupee to depreciate, and that will probably make IT stocks and pharmas gain till this sort of market positioning changes.
You mentioned, in fact, a lot of the PSU banks which are weak and in fact at fresh 52-week lows today. So Andhra Bank and Central Bank would be two examples of that. But the other one which stands out, which is at a fresh 52-week low, is also Edelweiss. Ashwani, what would you recommend on that particular counter?
See, if all financials are going down, everybody in some way is related to, rates going up. I mean, they also have, lending business, etc. So it's overall derating. I mean, there's nothing specific on Edelweiss. All financial stocks are going through a derating because everybody thought, lending business is great. And the moment, macros change, the entire economics of that changes.
Ashwani, thank you very much. Appreciate you joining in, and good getting that perspective, those trades from you right now. So that's basically where we stand at. Things are sort of picking up fast once again. A full 100 odd points now, almost a full 100 points. 11,046 is where the Nifty is at. We should actually put up the other big broad indices as well. So, I mean, the Bank Nifty should come up on your screen. Mid cap and small cap indices should also follow. Just do a quick check, 1.6% lower on the Bank Nifty, almost the day's low. The mid cap index is at the day's low, 2.25 lower, and the small cap index would also come up on your screen. That should be lower as well. Okay, Tata Steel announced earlier the acquisition of Usha Martin Steel facility in Jamshedpur for 4,600 crore rupees. Let's go straight across to Nisha Podar, my colleague, who's in conversation with TV Narendran, Managing Director and CEO Kaushik Chatterjee, Executive Director and CFO of Tata Steel.
Welcome to the show. We have with us the top team, the top management team of Tata Steel right here with us, Mr. Chatterjee as well as Mr. Narendran. Thanks so much for joining us on CNBC TV18. It's a big acquisition. Usha Martin like steel business, and that is in a row of M&As that Tata Steel has done. So my first question to you is, after Thyssen merger and that JV that was announced, then you had Bhushan Steel, now Usha Martin's unit. Is it the end of your acquisition spree in India? And are you also going to go ahead with Bhushan Power and Steel?
See, for us, this is a journey which continues. India is a growing market. India is an important market. And we said that last year that we would focus a lot more on India as we go about fixing the issues in Europe. And I think creating the JV in Europe creates an enterprise which is sustainable and can stand on its own. In India, the market is growing. It's growing at 7-8%, and we need to grow to keep pace with that market. These inorganic opportunities come to us at different points in time, and we need to be ready to seize it when it comes to us. The organic opportunities are more in our control, and we've continued to grow in Kalinganagar, as you know. So I would say that we will evaluate each opportunity for what it's worth, for its value, and take a call based on the attractiveness of the opportunity, our ability to go ahead with it. Obviously, we are conscious of our balance sheet and the debt on our balance sheet and what we can and can't do. But it is also, we believe, a good time in the cycle, and the steel markets globally and in India are quite strong.
But aspirations as far as acquisition in India is concerned, is that the end of that road is what I wanted to understand, because at some time you had said that 26 million tons is going to be your aspirational capacity in India. You've reached that. Now, are you going to end here? Is Bhushan Power and Steel still on your table?
It is on our table just now, simply because it's going through the courts at this point in time. We will go through the process. We will cross the bridge when we reach there. But as of now, we are part of the process, and we will wait to see what the outcomes are of the courts.
All right. So, Mr. Chatterjee, of course, as far as balance sheet is concerned, and Mr. Narendran spoke about that, over 1 lakh crore rupees of debt already on your books, and this particular acquisition of Usha Martin Steel business is going to increase it further. Of course, 2.6 billion or 20,000 odd crore rupees will go as and when Thyssen Group JV will materialize. But what is your deleveraging plan from here on?
So I think, as Naren mentioned, we will look at each of these growth opportunities in its own merit and in the holistic manner as to where it takes us from profitability, value creation, and the balance sheet structure is concerned. So with the completion of the JV in Europe, we would be reducing debt by about 20,000 crores or thereabouts. That will be first step. Second is, if you look at the current level of earnings and cash flow generation, we have our definitive plans of gradually reducing our leverage while we are still going to grow organically in Kalinganagar. So we are looking at positioning ourselves on a net cash flow level after the growth. And I think the next 3 years we would be happy to maintain our balance sheet post the deconsolidation of the JV, use the cash flows mostly for the organic growth, and for the surplus cash flows then to be deleveraged. And we're looking at parts of the portfolio also, which is also a part of an ongoing exercise. So I think the question is, if you continue to grow in productive assets, if you continue to grow in assets which gives you EBITDA and cash flow from day one, and have the ability to bring in synergies which may be proximate synergies, maybe structural synergies, our ability to leverage cash flows is most important. And that's the whole focus that we have today. So every ton of steel of new capacity has to be cash flow accretive. And that's our whole focus. As far as Usha Martin is concerned, when the transaction completes, I don't think that it's going to be a leverage transaction, because even in Bhushan, our marginal debt equity has been 50-50. We've put in almost 18,000 crores of equity in that company, which is not levered equity, pure equity. And we had about 17,000 crores. And we are seeing, as part of the phase 1 of the integration, and based on the markets currently, that our cash flow generations are healthy on that. So similarly in Usha Martin, we will structure it in a manner that it doesn't cause stress either to that individual business or to the overall balance sheet.
Okay, so that is the management of Tata Steel talking about acquiring Usha Martin steel business. That stock is down around 1.5%. But what we really need to concentrate on is the overall texture of the market, which is now worsening as we speak. So we have the mid-cap index, which is now down a whopping 430 odd points. And we have the Bank Nifty, which is at the low point of the day, showing an absolute cut of over 400 points as well. The advanced decline ratio has worsened. So it's currently at around 1:2, almost 4 stocks declining at this point in time. 548 to 1865 is what the ratio is on the Bombay Stock Exchange. Just want to point out that there are a couple of macros which have worsened just in the past couple of minutes. So Brent crude, in fact, has spiked up to around $80 per barrel just in the past few minutes odd. So that's probably weighing on our markets. And the rupee we had seen had worsened on an intraday basis. So maybe the rupee should come up for you as well. It closed at around 72.2 odd. On Friday's trading session, it had touched over 72.4 in today's trade, and now it's worsened all the way to levels of around 72.66, as you can see. So low point of the day for the rupee and Brent crude, which is spiked up to $80 per barrel. So all of that, you can see, is weighing on our markets at this point.
There's also, Ikta, the technical point of margins being called on, etc. So. After a session like Friday, the enormity of the movement, that would be a pretty large factor as well. I mean, brokers calling up, asking for additional margins if clients want to hold positions, and if that is not the case, then positions are sold. I would imagine that a lot of that actually would have happened on Friday itself because the moves were so large. But I think additionally there will be pressure today as well, and that is no less. Yeah.
And Prashant, I just want to point out specific stocks. It's flashing on your screen, but it's important to just reiterate that Indiabulls Housing is now down almost 10% at this point. It is down 100 rupees on an absolute level. So I don't remember the last time it probably slipped below 1,000 rupees ever for Indiabulls Housing. Bajaj Finance also,
on
which
Friday.
is down. Bajaj Finance, which is down
way,
around 6% as well.
Sorry to interrupt. Indiabulls Housing from the lows, the bounce itself on Indiabulls Housing on Friday was 36%. And with that 35-36% bounce, Indiabulls Housing was down 8% by close. From Thursday's close, it was down 8% after a 35% bounce. I mean, I can sort of keep going back and emphasizing the size of the moves that we saw. The markets had that bit of a swoon, 100 points plus lower, and then it's trying to pull back a little bit. 86, 87 odd points or so is what we got. 11,056 is where we are at, and we've been pointing out the rupee and the oil movement as well, both adverse to what the market would like to see at this point in time. Yes Bank is the other stock which sold off big time on Friday. I mean, the stock was down big time on Friday early on. I mean, it was reacting to what the RBI had said. But then, other stocks joined the action later on. The board is going to meet on tomorrow, essentially, and they are going to consider two basic things. One, the appointment of a new CEO, and second, what will Rana Kapoor's role will be as far as Yes Bank's board is concerned. Will he be part of the board, or will he actually not be part of the board? Ritu is here. She's been sort of speaking with a whole host of people, her sources, trying to understand how the board will look at these two issues. Ritu, morning, over to you.
Morning, Prashant. Yes, there are two very complicated things actually the board is going to deliberate on tomorrow. First one, of course, is the appointment of a new CEO to succeed Rana Kapoor. Now here, the general sense of understanding is that there will be a search committee which will shortlist 2 to 3 people that will be recommended then and given to the RBI for their approval. But given that 4 months is a short timeline, some of the people within the bank that we spoke to seem to indicate that they would be in favor of an internal candidate more than an external candidate. As we all know, Rajat Monga has been a big face at the bank. He was the CFO and is now a senior group president. He's seen as a very strong contender. Other internal candidates include Pralay Mondal, who's currently heading the retail business. There's also Padmanabhan Kumar, who is the chief operating officer of the bank. All of these are seen as strong contenders. Eventually, the Reserve Bank of India will have the final say in this appointment. But it is interesting to know that the articles of association of Yes Bank say that the two Indian partners, that is Ashok Kapoor, which now is Madhu Kapoor, and Rana Kapoor, have the right to nominate the MD and CEO. So whether or not they choose to exercise that right, that remains to be seen. The other important thing is Rana Kapoor's role in the bank. By virtue of being the MD and CEO, he is a whole-time director, and therefore the legal view is that his removal as MD CEO also amounts to his removal as a whole-time director. Now, while the Articles of Association of Yes Bank say that he's not liable to retire, Banking Regulation Act says that if a whole-time director is removed, his position as a director on the board of such a company also stands cancelled. So both of these Articles of Association and the Banking Regulation Act are actually, clashing. So we'll have to see how this plays out in the legal courts.
Okay. All right, Ritu, I think we're going to wrap it up.
Oh, absolutely. I just want to say that I think the more important of the two from a market perspective is not the search for a new CEO, but whether he will stick around. I mean, he will stay around on the board. Rana Kapoor will stay around on the board or not. And on that point, as Ritu detailed very well, the Banking Regulation Act and the Companies Act, they are sort of clashing at this point. And so we don't know what will prevail.
Well, Nischal Maheshwari, CEO of Institutional Equities and Advisory at Centrum Broking, is now with us to discuss the fundamentals. Nischal, hi. Thanks very much for taking the time out. So first up, are you buying NBFCs?
Morning. So I think there is a challenge in the market basically as far as NBFCs are concerned. So there are two sides of it. One is obviously the interest rates are going up and we have seen some amount of liquidity scare in the last week, and that's why we're seeing all these NBFCs getting decimated in the last 2 days. Now, having said that, I think there is still a big market out there, and as the market share is being lost by the PSUs, I think these are the guys who are going to be actually capturing it. Now, between these two things, I think these are what we see at the moment is maybe a medium-term, short-term to medium-term kind of phenomenon, but a long-term outlook still remains to be positive as far as NBFCs are concerned, that they will continue to do well basically as far as growth is concerned. Once this liquidity and the interest rate scare goes away, I believe NBFCs is a good place to be still looking at.
What names there, Nischal? Kotak's bank NBFC analyst put out a note saying he'd actually slew of upgrades: Shriram Transport, LIC Housing, Chola Finance, and a few others. I mean, the reasons are varied. Some evaluation. In the case of LIC, the reason he's giving is that it's a sovereign backed, so there is there's not going to be an issue in that sense, and valuations have come off as well. But how would you look at it?
I really wouldn't bother about the sovereign or not basically, but I would definitely look at it in a way basically saying that what are the few spaces where you will continue to see very, very strong growth coming in. So housing finance is one basically, where financial inclusion is another space. So I think these are some of the spaces basically where you should be looking at. Now you may choose your stocks. Now in case basically in this kind of a scenario where you are saying that there is a scare as far as quality is concerned, you may go out and be with only HDFC Limited. So, but there are these are the spaces basically which one should continuously look out for. So I think there is a big market out there, and business is not going away. Yes, there is a quarter or two of challenges as far as the liquidity and interest rates are concerned. But I continue to believe most of these guys are going to do a 20% plus kind of a growth. I agree with him on the Shriram Transport front basically, because CV cycle is doing pretty well. Industry is, economy is coming back. So I think CV seem to be in a good space.
Are you being more cautious towards the NBFCs?
This is a good time to look at some of these good quality.
Are you being more cautious towards the NBFCs that have a larger LAP or LAP portfolio? Are you more cautious towards them?
In a rising interest rate kind of scenario, you need to be cautious basically, people who have more LAP portfolio. And given that some of this might become an NPA, So that is the scenario basically you want to be in. Definitely rising interest rate scenario, there is a caution.
Okay, Nishal, let's talk about the big problem right now in the market, which is IL&FS, right? Large book, clearly needs help. Question is, who will step in to help? Will the government backstop it? Should it? All kinds of questions. What are your thoughts? I mean, what is the final solution to this one?
Given that it has got, it's sort of a quasi-government kind of an organization, basically, if you look at really the guys who are the owners of this, LIC owns a large chunk out there. I think if I'm not wrong, it's around 40% ownership is there. And there is Oryx of Japan, basically, which has got another 21%, and it is keen to buy more. I don't think so. There is going to be a big challenge out there, basically, given now what we have to see, what is the kind of portfolio they have of 50,000 crore, what kind of challenges on that portfolio we see. That needs to be seen, but I think as far as finding a buyer, I don't see that is a challenge.
No, because would you agree that has been the issue which has roiled markets last couple of days? And if there is a meeting called by RBI of the various shareholders of IL&FS.
Yeah, that was the trigger point.
Yeah, and if money is infused, we go back to worrying about oil and rupee, etc., which was the worry the week before. And not IL&FS. IL&FS at least was not center stage as it is now. So if cash comes in, you think things go back to as they were before?
I don't think so that things are going to go back to normal as it was before and people only worry about this thing, because once the incident has happened, I think everybody is going to be looking over its shoulder now. Because that kind of a scenario, it's not going to become so easy immediately, because I think now everybody will become very, very cautious about liquidity. People will start holding cash. There would definitely be a slowdown as far as asset creation is concerned. So I see that cycle has to play out now, given this kind of a big move has happened in the market.
Okay. Before we let you go, Nishal, just a quick last question. Do you anticipate further pain for the mid-caps?
I still clearly see that there is some more way to go as far as mid-cap is concerned, basically. We have to be very, very cautious as far as mid-caps are concerned. I think quality is becoming very, very important again. Given this kind of outlook on the market, I think quality mid-caps one should be focused upon.
Okay. All right, Nishal, we're going to let you go on that note. Thanks very much, as always, joining in and giving us your perspective on the markets. Just want to point out that now we are sitting with a 500-point cut on the mid-cap index, and the Bank Nifty is down over 450-odd points as we speak. So it's turning out to be one of those days, maybe even 11,000 could be something that the market is just about going to look to protect at this point on the Nifty.
Welcome back. 11,031 is where we are at. So 110 odd points lower is what we have. Just a couple of names which are again sort of selling off. It's basically NBFCs once again as a pack which is coming off. DHFL at one point was up about 22-23%. It's got about 8% left on it. 378. The closing was 350 or so, I think, on Friday. It got to 300 kind of levels, of course, at the low point, and then jumped to about and by close was about 350. Bajaj Finance, look at that, 7.6%. Indiabulls housing, that'll come up again, big cut, 10%. L&T Finance is down. You look at Edelweiss, I think Edelweiss is down 10% or so. That should come up on your screen. Chola Finance, that also, the last I checked, was up, was down about 7% or so. And I could, I mean, go on. Motilal Oswal, Reliance Capital, Capital First, Muthoot Finance, anything between 5 and 7% cuts across the board. So we'll continue to track this story, the NBFC story, and of course the overall market as well, which is looking pretty weak. It's a wrap here on this edition of Trading Hour. Thanks for staying with us. Halftime report comes up. It'll take all the action forward.